everyone, John Henry here, slingshotfutures.com, and welcome to the Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow's trading is going to be for the 12th of the month. Feels like the month just started, and we're already talking about halfway through. Overall, really just kind of well, sort of what you expect to see on this type of environment. Yesterday we were talking about how there's a good chance that we could just be a little bit slower. There may be a situation where there's just not a whole lot going on because a lot of people are still coming back from vacation. And I don't know about you, but the first day back after a vacation, i.e. yesterday, Monday, I tend not to be that awake, that aware of my surroundings, right? And a lot of times you're going to see that same situation throughout the other people too. They're all humans as well, and they're coming back from that vacation. Today, likely a little bit less groggy coming in, right? Maybe a couple extra cups of coffee, but for the most part, trading seemed to be a little bit more normal today. Now, at the end of the day, we had quite a bit of movement, but for the most part in the US session, it was a little bit calm, a little bit quiet. We had some pretty good moves overall, though, if you were patient for them and kind of hung around and waited for the best looking setups. Now, before we jump on into the charts, as always, make sure to swing on over to slingshotfutures.com. Scroll down and grab the Join the Daily Outlook newsletter button right here, and that's going to let you sign your email up with us so we can send you a message every time one of these videos comes out. Along with that, we post in there different stock things that we're taking a look at for different stocks, options, futures, forex, cryptocurrencies, you name it, it's going to be in the newsletter at some point. So it's a great newsletter to get your hands on if you haven't done so already. At the bottom of the page as well, don't forget to check out our latest blog post section. This is going to have a couple different things in it. Right before we open up the live trade room in the morning, we post our live trade room morning prep levels, and those are going to be the major levels of support and resistance for that day that we're going to be keeping an eye on. Now, along with that, in the afternoon, we go over either a market psychology video or a trade of the day example video where we go over a trade that we may have found that day that we're just kind of keeping an eye on and sort of take a look at how that all played out. So some great resources down there at the bottom of the page. Now, if you haven't done so already, make sure to click on the live trading subscription and trial info. You can sign up for a one-day trial so you can sit down with us in the room, see what we're all about, and just kind of hang out with us for a day. It lets you kind of see into what we're doing all day, every day, and how we approach the markets and make our trades. Now, along with that, you can bounce questions off of us. You get to meet the members a little bit. It's just a really cool thing to do if you haven't done so already. And if you really enjoy it, of course, you can always subscribe for a weekly or monthly subscription. And if you decide to join as a full-fledged VIP member, you get the live trade room as part of the package. Now, taking a look at the euro, for the most part, relatively calm and steady for most of the morning, but then it really started breaking out at around 10 o'clock, going into 11 o'clock, with a lot of bullish sentiment higher. Now, that bullishness to the upside, it really doesn't necessarily, you know, well, at least initially doesn't necessarily say, hey, this thing is going to the moon. But as we get continuation of that momentum, we have the buyers break out. The sellers barely get 3 candles stacked side by side before it breaks out again. Sellers can't even get 1 candle, more than one. They get 2 of them, and it immediately breaks out again. When you see that consecutive over and over and over, one side just keeps hitting their head against the wall, and the other side just keeps ripping it further, there's a good chance that we're dealing with a potential breakaway market, and that is exactly what we have our hands on right now. Now, on this rally to the upside, the euro has one more open objective up at 15,250 towards the high there, and that's really kind of the final line in the sand. That's the major objective that buyers have been building into after that really strong breakout that we had right here shortly after 130. Now, that upward momentum, does that mean that we're going to stop right there at 1525? You know, maybe. There's going to be a decent amount of profit taking. But one thing that stands out here is the fact that we overshot the top of the channel. We even continued, but this time we tested the inside and fell lower. So notice that kind of difference, right? The amount of strength that went into blowing through the highs, and then when they came back to it, they couldn't even break out of the highs before failing back lower. That's a big clue that we're running out of steam and we're starting to pull back. So that tells us that the buyers are trying to get better prices. They no longer want to buy too high because they're giving away too much of the trade. They want better prices so they can make more money. Now, that pullback area, the first location that I'm looking for potential buying in, we just came close to it right there, 15,010, 15,015 or so. That area is going to be the big one that I want to see the market cycle off of. Now, if we can get a push back down, we have monthly support in the way, and then we have the next level of support coming at 14,880. After that, we have weekly support, monthly support. Now, if you notice, there is a line cutting through there as well. Not only is that monthly support, but we also have 60-minute support in the exact same place. So 14,720. If it does pull down that low, there's a lot of kind of a multiple stack of orders in resources that the market can use for a possible bounce there. If it does want to go a little further, 14,600 and 14,440. We got to be prepared for all of them if it does pull back that far. I doubt it will. Really, I'm just looking for 15,010 to 15 or so, but yeah, we'll wait and see what the market wants to do. It hasn't hit that area yet, and that's really my key area of interest going up towards that 1525. Going on a little further here with gold, we have mostly a range on the day at the end of it. We had a halfway decent bear cycle working its way lower. Not really a whole lot going on after we broke out. They tried breaking out of the bottom and failed all the way back up. Very aggressive bullishness off of those lows. And if we zoom out a little bit, we can see that it's still kind of that same place. Remember the area we were talking about yesterday? Yeah, well, guess where we came back to, right? We came right back down to that low, and the buyers were not messing around, and they just rocket shipped that market all the way back up again. Now, this strong, aggressive bullishness, we have one upside objective for the buyers at 1217.6, but we still have this earlier swing low area that could turn into resistance as well. Something else to keep our eyes on, and that's around 1219 or so if we want to cut it in the middle. So not only do we have the major objective that the buyers are looking for at 17.6, but right there at 19 or so, we have another stack of potential orders that might just be waiting to dump on the sell side and push the market back down. Overall, though, we have a very bullish market so far coming off of these lows, and we really don't want to try to get in the way of those buyers until we get proof that the sellers are coming back. You don't want to jump in too early. It's usually when you get your knuckles slapped, right? So the overall momentum that we have is bullish. We're looking to be buyers at as best a price as we can get. Now, the lowest area that I would really be considering a possible buy-in would be 12.7 down to 12.1. If we can get a little bit lower than that, chances are the buyers may be falling apart a little bit, but 12.11 and 9.4 are both areas of interest as well. I'm not so sure how much emphasis I want to put on there if we start cracking through this 12.7 to 0.1, just because this is really the line in the sand for me. I want to see them hold just above that weekly support and then push right back up again if they dip lower, in the overnight session. Over on crude oil has a beautiful upward momentum move, just breaking out of this range that we had from 12 o'clock until, and almost went until about 1500 in the afternoon. Just really stagnated inside here, and once it finally broke out, they let loose and just went ripping to the upside. Now, obviously, a lot of that could be due to the fact that the API report came out and the API helped that bullish momentum higher. Either way, though, we still have a structured type of breakout where we have a range. They broke out with continuation of the trend. So everything is really aggressively pointing to the upside, and we have a large bull trend inside here as well. Now, the API is something that we definitely want to keep our eyes on, and that breakout move obviously is no joke. The buyers are still continuing the momentum after that pop higher into monthly resistance at 45.80. We don't have hardly any pullback, and if we do continue on this track to the upside, we have open objectives at 46.14 for the buyers to gun for. Now, one thing that does really stand out here is the possibility of a wedge top that we've now broken above. And a lot of times when you get that sort of situation, we may just go sideways for a little while and notice what starts to stack up. The longer it takes, the closer we get to that kill zone, where we may find that finalized bounce to get up to that 46.14. Either way, the main objective that we're looking for at the moment is 46.14 to the upside, and there are a lot of different levels that we can use as support on the way up, but we have to be careful. This is getting very, very extended to the upside. I would love to see a pullback. If we can get down to 45.27 or better, 44.81, 44.59, 44.25, any of those, I would be very happy to see prices and what they want to do around there. Chances are, with the amount of extended movement that we have going on, buyers aren't going to want to buy this high up. They're going to want to buy pullbacks. They're giving away too much of the trade, buying way, way up here. They're going to want to try to get into that little bit of a dip, and that's what I'm going to be looking for as well. So looking to buy the dips here on crude oil back towards those highs to finish the objective. And then we've got the S&P. Now, the S&P was a little bit of a kind of a mess today, in all honesty. We opened up here, and we're going to be closing right there, and basically they weren't able to accomplish a whole lot at all on the daily spectrum. We have a bullish candle, kind of, with a huge rejection of the lows once again. Now, if we zoom out a little bit, this is kind of the same thing that we were talking about prior when we zoomed way, way out. This big rejection down here, remember that 3 push wedge bottom that we had? They found that rejection off of that. Well, now we're sort of seeing the same thing. We had a possibility of a 3 push wedge bottom that blew way out of the lows and even created a situation where we had a very wide 3 push wedge bottom. And that even came back to retest that earlier area of support turned resistance, or resistance turned support in this case, from a couple days ago. So this is a big, almost what you would consider an intraday flash crash, just a big hammer to the downside, and the buyers took that as an opportunity to buy in cheap and rocketed the market right back up. We do have some upside objectives for the buyers at 27 3/4, and the major one up at 33.5, 33 3/4, as the market wants to try to get back into that earlier range that we've had for the last, it feels like a month now. We're just kind of rallying back and forth. The sellers tried to get the breakout. They found huge buying support earlier on the 6th through the 7th, pushed the market all the way back up. We found cheap prices again, kind of midday today, and we haven't looked back since. So the overall daily candle is just going to be one big doji, and a big ugly one at that. And now we're nearing the highs. Chances are buyers are going to be looking to finish that move off towards the top at 27 3/4 on up to 33.5, 33 3/4 or so. Now, in terms of the overall move, I really want to look to buy a potential pullback. I don't want to buy too high in this, because if this does end up being a range, well, we know that the last place that I want to be buying is at the top of a range. Doesn't make any sense. So I prefer to see a little bit of a snapback to earlier areas of interest. We had a lot of support come in here, resistance, resistance. We broke away from it. We have yet to pull back. So I would love to see a response at 20.5 to get that bounce back up, finish those objectives off to the upside, and kind of call it quits from there. We are probably looking at a lot of the same tomorrow in terms of range-bound movement, but with this bullish breakout that we've got going on right now in a couple of the markets, may have a little bit of an interesting day. Now, of course, looking at the news for tomorrow, we do have a pretty full docket of things going on. A lot of it isn't happening until 10 o'clock again, but we have a lot of stuff. Tomorrow morning at 4:30 out of the UK, we have the average earnings index plus the bonuses, forecasted at 1.8%. At 4:30 as well, we have the climate count change for June, forecasted at 10.0 thousand flat. At 10 o'clock tomorrow in the U.S. session, we have Federal Chairwoman Yellen testifying. That is a big deal. Whenever Yellen is on the microphone, you do not want to mess around with the markets. It becomes really, really nasty. Also at 10 o'clock out of Canada, we have the Bank of Canada Monetary Policy Report and the interest rate decision. They're forecasting a lift in that interest rate decision to 0.75 from the previous of 0.5. At 10:30, we have the crude oil inventories, of course, at negative 2.850 million. The previous was negative 6.29 million. And then at 11:15 out of Canada, we have the Bank of Canada, Governor Paul Laws speaking. And that's really the last of the big news. So tomorrow, a lot of stuff going on from 10 o'clock to 11 o'clock. Not really a whole lot before that, and not really a whole lot after that. So may have a big burst of volatility, and then everybody calls it quits and heads back to the beach again. We'll have to wait and see. But like we always say, make a plan, trade the plan, follow the rules. You'll be A-okay. Until next time, we'll see y'all then.